Good morning. This is Nicholas Furtak for NakedTrader.com. This morning we have a few charts. We've had a big move on the Dow overnight. Down continues problems with the Obama administration struggling to get the fiscal cliff resolved, plus some more Greek problems. This has an immediate effect on the South African rand, the ZAR US dollar exchange rate, which has been weakening through most of the year due to the massive deficits on the current account as well as on the trade account that we've been running. We foresee further weakness on this pair trade. Currently, our high of the recent weeks was around 9. We've got a weekly chart here. You can see the trend has been up. We broke 850, which was a very significant level on the way up a few weeks ago. And we peaked at around 9, just below 899. We're once again running towards that 9 level. I would be looking, if we already short, in other words holding US dollars long against the rand, you'd want to, if you break 9, stay in the trade. If not, and it struggles around the 9 level, you can cover to take profits. Those who aren't in trades like yet, just take above 9, you can take it long again. Long the dollar, short the rand, as with the current account figures that have been coming out recently, the bets towards the downside. Interesting chart we've got on the S&P 500. Bring that up now. This is also a weekly chart. This is our trend line that's been tested 1, 2, 3, 4, so it's reasonably significant. We are a little bit oversold. Just beware of the RSI getting to a bit of an oversold level, so I don't know if it will whip back quickly back into that trend line as to stay above it, but we'll just zoom in a little bit here and we can see that it has broken down, and possibly the next target would be around down here, 1270, 1260. So those who have taken the short on the breakdown can hold there. If it whipsaws above, which I'm almost hoping it will, I'd quickly cover any shorts taken, because this could run up and make a new high. It's starting to look a bit unlikely, as this trend is quite old. The longer the bull market, they don't tend not to get to 4 years and above. Then the more likely is that it's the end of a trend move. With the trouble in Israel as well, that hasn't helped. We'll just reconfirm our sentiment on the American market by looking at the Dow Industrial Average, the Dow 30, and it's also on a weekly chart. We're going to zoom back, similar line to the S&P. We had a little bit of struggling on the RSI to make new highs, some divergence. We are warning once again, a little bit oversold. I'd be looking to pick this one up at the 1200 mark. So it's about 500 more points to pick up a long, and then rally towards the back, maybe towards the trend line. But if this breakdown doesn't move back above by the end of the week, Monday, this trend line can be deemed to have been broken significantly, and that's going to be quite a significant thing, and possibly a lot further downside. But 1200 should be the first stop if we do break down further for a little bit of a bounce. So there we have it. That's Nicholas Furtak for NakedTrader.com.